So good morning, good evening, good afternoon, wherever you are chatting from. So today we're gonna talk about key level. So on my model, which I chose CRT, I usually 3 key level. I use 3 key level on my trade, which is the FG, which is my fair value, open close, key level, the A shape, key level. So I'll be breaking them theory one by one, how you can use them as to trade your reverse strategy you are trading. So let's start with the A shape key level. So on this 2 candle here, we have a bullish candle and bearish candle. We have a bearish candle and a bullish candle, and this key level is called A shape key level. So this is my CRT, which is candle range theory created by Romeo. On this trade, let's assume we are on downtrend. Let's assume we are on downtrend. So what is a key level? I can say a key level is like a support which tells you your trade is A plus setup. So when I say key level on my trade, it's like an A plus setup on my trade. So a key level can still show you the direction of the market as a support. So we are on downtrend. Let's assume we are on downtrend. Now I'm going to use the daily time frame, the daily candle range theory, as an example for this video. So this is my H-shape key level. Don't worry, if you are not getting it, once you enter the chart, you will understand more. So this week, there must be a week to form the A shape. So you mark it from here. So what you expect price to do is, let price come and break this candle high, which is your torso, to reach the key level, to touch the key level, then go to your direction. So you expect market to come like this. Then go down. So if there's a really key level on the downside side, you can still target it down based on where the key level is. You understand? So people say key level is a resistance too. I think so, but it's a resistance because it's a support. I hope you understand this one. Your key level, candle range theory, liquidity sweep, your candle range theory, touch the key level, straight down. The next one you are going to look at is the open close key level. This is bearish. So you see is a week here, there's a week here, and there's a week. So there must be a week to give you the open close key level. So once you see this market like this, not rushing, step by step. So your expectation on the market, we are on downtrend because this is a bullish open close key level. Let's pay market to come now. Let me say there's a CRT high and low. Sweep the CRT high, touch the open close key level, then target your wherever you are targeting, maybe your TP. Same example as a bullish key level. Like this, touch, goes to direction. But something you need to understand, if it come like this and it did not break, like it did not continue up, then it's sorry. You can use it as a breaker block, touch back and go down. So we have done the A-shaped key level, the open close key level for the bullish and the bearish. And the next one I used to use, which is called the fair value gap, which is the most popular one most people know. So a fair value gap must be a 3 candle, but one thing I need to tell you is that it must not be like a big candle, because when I was learning back then I used to think a fair value gap must be a big candle before, but it can be a small candle. Even that small candle, it has strength to put the market down. So a fair value gap is just like a gap which a lot of amount of money is stuck there. So the market need to fill that gap before continuing up. So you drop your fair value gap from this up of the week candle to the third one up. So two ways to trade fair value gap. Maybe have a CRT down here. Expect market to come like this. Touch your fair value gap, sweep your CRT low, then touch your model one and target. You can enter your trade from here. Sorry about the network. And take your trade. So now what we're going to do is I'm going to go to the live chart and show you some more example for the theory key levels. Make sure you like and subscribe. Don't forget to like and subscribe. So I'll use the daily time frame as example. So this was the trade I took. I took one trade and I didn't take the rest because I was a little busy today. So I'm going to delete this restart it again. So this was Wednesday candle, and when you see a candle reach something, understand if there's a weak, there's a high, there's a low probability that the market may not work, because this is where liquidity is, like this little place, this is where money is, but there's a wick down here. So for me to enter this trade today, I saw my A-shaped key level, sorry, open close key level. You can see it here. I mark it. So this gives me high 100% that the market go to my direction. This is Wednesday candle, accumulation, manipulation, and distribution. This high. So for my entry mode, I use 1 hour and 15 minutes sometimes. So I come to the 1 hour time frame to see an entry. So there are two models to entry. We have the fair value gap and the model 1, which is your CROT entry model. So for high confirmation, I saw inversion fair value gap and another model 1. So I took this trade from here along. I think I took it from here. Put my stop loss below here. Target this high. This was a beautiful trade. You can come to the 15-minute time frame. You can see it. So we have seen an example of open close key level. So let's try and see the A-shape key level. So this is a running trade. I've already closed this trade because today is Friday and when market open on Monday, Sunday, I don't know where the market will jump to, but high probability the market can come to this key level here. So let me do this. So this was my candle story on Wednesday. So for now we are finding a key level. Which type of key level do we see? So I will give you 10 seconds to ask yourself and to find it. So let's continue. This is an A-shaped key level. You can see the market sweep the candle reach, which is a daily candle, sweep below, came to this key level for it move up. I put my second profit here. This was my first profit, my first TP, second TP of this key level. Come to my 1 hour time frame. I saw a fair value gap. You can see beautiful fair value gap, and I still saw a model 1. So I waited for the market to retest to this fair value gap. I entered long from here. This was my first take profit. This was my second take profit. So the market is still going. This was the second trade. Let's see whether we can see another trade for more example. Make sure you like and subscribe. Oh, beautiful. Okay. On this one, I didn't really see a key level on this one. I thought there was an A-shaped key level from this side. There was an open close key level. You understand? See, the market came straight up here. These are key levels that the market did not respect. So key level that the market did not respect, they are still valid key level. You understand? For this one, use the model 1 entry, which I like calling OB. So this was a Wednesday candle. What do you see? Guess what we see? Open close key level. This was my first TP, but I know that market will surely come to this open close key level. I went then straight to my 1 hour time frame to see refine my end. I saw a model 1. And there's still a fair value gap here. So I'll go to the 15-minute time frame. You can see the market retraced to this fair value gap and still retraced to this model 1. This gives us an A plus setup. So I missed this trade though. I took the trade from here actually. Put your stop loss above the fair value gap, or take your profit. And the CRT, there's what we call a 50%. Sometimes the market does not reach your TP. So there's what we call 50%, which the market will reach before you reverse to hit your stop loss. So I use my fib for the 50% range. So I'll draw it. Can see. I think I'm having a bad network. So as we wait, there's a recap I drawn on BTC. I think if you guys should go and watch it. So I will close this video from here because I think I'm having a network issue. So you can watch the recap on BTC.